Uh, just to check one, just to a couple of speakers. Ify, did you manage to connect? I think two speakers were trying to dial in. Let me see if they. Hello, everyone. Can you hear me? Okay. Okay. Welcome, everyone, to SSG Webcast on COVID-19 impact on African economy growth and trade and business. So thank you so much for joining us today and taking your time at this critical time to hear what our speakers has to say. I hope all our speakers has been able to join. We have two waiting, but in the interest of time, probably we'll kick off and then along the way I'll double check to make sure that they might have been able to join. So just to kick off the discussion, my name is Eugene. I'm the co-founder for SSG Consulting and the chair for One Africa Network. It's the network for which engage African professionals, business leaders, and entrepreneurs within the UK. Then I'm also recently the interim chair for African Business Chamber based in the UK with a limit to establish trade between the UK and Africa post-Brexit and now post-COVID-19. And today I'm supported by my colleague Dennis Aguma, who's also a partner at SSC Consulting and also co-chair at One Africa Network and a visiting lecturer at Birmingham City University. So just to kick off before we start a bit about SSG Consulting, we are a global management consulting and professional firm. We provide a suite of services from advisory, consulting, and operation across various sectors of economy, including business services, automotive, manufacturing, and emerging market sectors such as healthcare, agribusiness, sustainability, and all those. So we work with various international organizations. We have presence in the UK, where is our head office is, but we have local offices in Nigeria, Rwanda, and recently we launched our office in Washington. So for the today discussion, we'll be looking at the impact of COVID-19 on African economic growth, business, trade, and investment. I'm sure a majority of you are aware some of the major trend and headline in the last 2-3 months as a result of COVID-19. First and foremost, of course, is a global crisis and a human tragedy, majority mainly in Europe and the US, where we've seen a huge number of people affected. And this also has far-reaching implications, mainly lockdown in many countries, restriction on travel, change in business as usual. As you can see, majority of us have been working from home for the last 2 months. Major disruption on the global supply chain, market, and global economy expected to slow down, and the recession expected in major countries, including Africa. And of course, businesses are threatened in every angle, and we've seen stock market share falling, wiping so many trillion, and the recession. And of course, recovery may be depending who you talk to, if this year, next year. And in Africa, also, we've seen disruption in for millions of people's livelihood across the region, with disappropriate impact on households, which we've just been speaking to a few of the people on the line. And of course, majority impacted mainly small and informal business, and with major impact that is being defined by the African Union and the UNEC as MESS. MESS means mental health impact, economic, social, and sustainability. So looking at the impact on various mental aspects for human being, economic in terms of contraction, falling growth, investment slowdown, supply chain, trade disrupted in major countries, and we've seen commodity price falling, and of course, rise in poverty. And social, of course, there is a huge increase in inequality and employment in major countries, loss of jobs, and But on the brighter side, we've seen an improvement in sustainability where the environment is improving because of the restriction in travel and movement that normally creates in emission. So, and of course, looking some of the report from McKinsey of the initial assessment, they are looking at the Africa GDP growth by 2020 to be cut by 3 to 8, but I'm sure these figures will be revised based on the as we progress and the number might go up. And also in addition to the impact of oil price shock and Africa, some of the countries that depend on oil price like Nigeria and Angola are already struggling, and all this in absence of major stimulus policies. So today the objective is just to provide the latest updates, and hopefully our speakers we've invited will be able to give share some insight on the reality on the ground, the latest on the crisis, and help us to break down some of the responses that we've seen on major African economies and the implication, and hopefully they can be able to give us some guidance. Majority of the business that will be joining us and the entrepreneurs looking to trade with Africa, some of the short-term and the long-term best practice, and of course including cross-border trade risk mitigation. So to help us break down some of these topics on the agenda, I'm delighted to welcome our speaker. I'm not sure, Frank, are you on? Have you been able to join? No. Dr. Bheki, welcome. Hello, Dr. Bheki, can you hear
me? Yes. Thank you.
Okay, so so we have Dr. Bheki, who's the founder and strategic economic advisor on SA Advisory, and is also a former special economic advisor to the president on South Africa. And we have Dr. Ifi from UNECA. Dr. Ifi, have you been able to connect? No, I think she was trying to connect. Hopefully she'll be able to join us. And also we have Ezekiel Odiogo, who's the head for private sector investment at the FDB, African Investment Forum at the African Development Bank. Hi, Ezekiel, welcome.
Thank you very much.
And we have Damali, Ssali, who's the trade development expert at the TradeMark at East Africa. Damali, can you hear me?
Yes, I can. Thank you so much for being here.
And it's finally to check in Vichaya, who's the country director of DIT. Vichaya, have you been able to connect? Oh. I think we have 3 speakers currently trying to connect, but in the interest of time, probably we can kick off the discussion. So before we deep dive into the agenda, if I give you a few minutes to introduce yourself, starting with Dr. Bheki, and give us a brief overview in terms of the reality on the ground and how the COVID-19 has disrupted the usual business, what we call business as usual, and what are some of the things that you are seeing on the ground. Welcome, Dr. Bheki. If you can introduce yourself and give us a brief in terms of what's the situation on the ground.
Yes, thank you, Eugene. Thank you, fellow panelists. Well, my name is Dr. Bheki Mfeka. As you said, Eugene, I'm economic advisor and strategist. I work with business and government leaders, especially facilitating investment into the continent, as well as South Africa in particular. Well, since I think South Africa became one of the first countries in Africa, I think after Egypt, to have the first case of coronavirus. I think that was early March. And our government was quite proactive in mitigating the early infections, especially from travelers from hotspots around the world, China, Italy, lately UK and America and other European countries. So the lockdown happened middle of March, and we had quite a very drastic and a total shutdown of the economy, except for a few essential services like food and energy, telecommunication, the bare minimum basics for survival. So if you look at the models of lockdown in the world, South Africa has been one of the most stringent models that have been applied, which of course, after it was extended, after 21 days, it became quite a very contested whether we should relax or not, the consideration on the potential increase infections, and the economic impact of the lockdown. Currently, where we are, the projections by our national treasury is that our economy is likely to contract by 17% of the GDP, which has almost shocked people because they weren't expecting that much contraction. Other projections by different organizations like the OECD are almost at the same range as well, like 18%. But with the lockdown continuing, we may see further damage to the economy. And our contestation is more on the balancing between the lockdown and the economic impact. And I've strongly argued that in our context, total shutdown is not appropriate because of already high level of poverty, inequality, and unemployment, which on itself is the biggest killer in our country, as well as similarly in other parts of the continent. So we're currently looking at what the president is going to say today, because he's promised to make an announcement on strategies to relax the lockdown and allow people to get back to work under safety precautions and measures to protect and avoid further infections. That's where we are at a high level. I think our situation is probably similar with many other countries. Thank you, Eugene.
Welcome, Dr. Bheki, and thank you for that brief introduction and the overview in terms of the current situation in South Africa. Clearly, there's quite a lot of economic impact on the current situation, the lockdown. Before we go into detail, if I go next to Ezekiel to also introduce himself and also give us an overview in terms of the investment landscape situation at the moment and the reality on the ground. Ezekiel, welcome.
Sorry, I was just on mute previously. Oh. Thank you so much, Eugene, for this introduction and for setting up this timely panel. I think, and also fellow panelists, I think this is a very critical time uncharted territory and quite a defining moment in our history as a human race, if I can use that carefully. My name is Ezekiel Odiogo. I am the head of the head of private sector investment operations for the African Investment Forum, which is a unique and innovative platform championed by the African Development Bank alongside with its partners to mobilize investments across Africa's critical sectors. And also I am based out of South Africa, but I oversee the continent. And we've had our first two forums here in South Africa November 2018 and November 2019. I think on our parts, I think the impact of COVID has been quite unprecedented. I think beyond just the economic and the human cost to this and the health systems, I think what this is also bringing is that we're beginning to question elements of globalization, particularly when it comes to global supply chains. We've seen disruption in that global supply chain. And touching a bit on trade here, I think is a reawakening on whether we begin to refocus attention on developing our in domestic economies and building those national value chains and as well as regional value chains, because the era of expecting your dependence, particularly for Africa, where almost everything is imported, even things that we can produce imported. I think COVID is beginning to unveil the realism that we need to refocus our energies and refocus our attention in building productive capabilities. So I see quite a lot in developing our healthcare infrastructure and health systems, also developing as well our productive capabilities in agriculture, as well as in industrialization in other areas. But what I would say is that despite the fact that we all know that, as the IMF projected a few weeks ago, there's actually a global contraction of about 3% due to COVID. But also, we've seen about 90 billion disappear for emerging economies or developing economies. So the question as well is that Africa is not insulated. According to the estimates of the African Development Bank, we expect on a very worst case scenario for there to be about 22.1 billion impacts on the continent as a result of COVID, but also rising down to 88.5 billion when it comes to about economic impacts as a result of COVID. But interestingly, I think even though the financing gap has now ballooned because we're now very vulnerable in terms of the fact that we haven't really built those systems that we are supposed to really focus on. I think we estimate about 110 now, billion of that financing gap, rising to somewhere about 154 billion. And that has moved from 68 billion to about 108 billion in the previous estimates. So these are staggering numbers. But what it does show is that all is not that bad. I think as COVID has depressed assets and other infrastructure asset class, I think it has also unveiled unique opportunities of investment. And I think that's the sentiment I would like to stress, because for Africa to actually respond, it means that we need to actually develop quickly and invest more on building these systems. And I think I will touch on that as we move on. So thank you very much.
Thank you, Ezekiel, for a very insightful intro and also overview in terms of the investment landscape and the impact of COVID on the investment flow inwards and the globalization. Probably I'll bring the question later, how globalization is being impacted. There's lots of the talk about deglobalization, and also you just touched on about looking to see how we can start focusing on building local value chain instead of depending on imports. So I will touch it later. But if I go to Damali, if you can introduce yourself and also give us an overview in terms of what's the trade situation and the economic landscape within the East Africa region, and how COVID has reshaped the business as usual.
Thank you, Eugene. So my name is Damali Ssali. I am a Ugandan based in Kampala. That's where I'm speaking to you from. And I am an accountant by training. I worked in the City of London with a hedge fund in the financial services sector. Then I came back home after getting my MBA in France, and I started my career on international trade and development. So yeah, that is me. Just a brief background, particularly on the COVID situation, where we are in terms of the lockdown. Uganda specifically is in its this is the 6th week of a lockdown, and everything was stopped except for the activities related to food. So the markets are open, but you can only buy and sell food if you're going to be involved in the activities. Also, private cars were stopped from moving, and only essential services were allowed. That's medical doctors, bankers, cleaners. And Uganda, I think, took one of the hardest kind of lockdown, I think, in East Africa, but also Rwanda did, and Rwanda started its lockdown, I think, 2 weeks before Uganda. Rwanda, for now, has started easing slowly the lockdown, and Uganda probably in the next 2 weeks will start easing the lockdown. Kenya took a little bit of a easier lockdown. They instituted a curfew, and then also you could not move around in and out of Nairobi. Then for Tanzania, they haven't taken so much of a serious lockdown per se as a country. They are moving on as things as per normal. And so back to Uganda, I think so far we've had about 100 confirmed infections of COVID, and there have been, no one has died. They've looked after them, the Ministry of Health, and the recovery rate is about 70%. So in a way, the government measures that were taken seem to have at least flattened out quite quickly. And also the government tried to provide food to the daily wage earners. So the government has been distributing food in the slums, in the areas where they feel that the poor and people who can't now earn a living are. They weren't giving it to people who, of course, work in offices. So in a way, that has tried to ease the pressure, the social impact of the lockdown. However, of course, this has had a huge impact economically. And so for the private sector, particularly in Uganda, they are in survival mode. I've been on several panels where they discuss they're trying to see how they can keep their cash flows, how they can stay liquid for the next 12 months, because they estimate that's probably how long it will take. That even if the government lift the lockdowns, it may not, they won't just go back automatically to the levels that they were at before. So they're trying to see how they can maintain their cash flows for 12 months and liquidity without, if business doesn't go back to normal. Then there's also a lot of uncertainty about when is the recovery? When will it happen? Will it be after 6 months or after 12 months, after 18 months? And because of that uncertainty for the businesses and the private sector, it's very difficult for them to make any business decisions on, say, any investments, or can I enter a new market? Can I employ more people? Or do I even lay off people? Because I am not so sure. The private sector in Uganda accounts for about 70% of total employment in the country. So it means this huge number of people are uncertain about their job security. So it causes a bit of anxiety around that. For the specific main sector that has been hit quite a lot, and that is for, I think, most countries in East Africa, is tourism. So Kenya tourism is one of its #1 export earners. So is Tanzania, and so Rwanda, and also Uganda. These are the biggest export earner in East Africa is mostly tourism. So the fact that there's been a global shutdown on air travel has affected, is obviously going to affect a lot of the countries in East Africa. If I go back down to Uganda, tourism contributes about 10% to our GDP. It's one of the top foreign exchange earners in the country, contributes to our reserves. And then it employs about 80% women and youth employed in the tourism services sector. So the impact on of this tourism sector is going to be quite significant, because if you look back to the 9/11 terrorist attacks, which put a shutdown on global air travel, it took about 2 years for the world to trust air travel again. And because a lot of our tourists, the contributors to the tourism sector are actually foreign tourists, it means for 2 years, the tourism sector is going to be in the doldrums. Our domestic tourism is not doesn't contribute as much to the general tourism sector as it should. Maybe the governments will now try to catalyze domestic tourism, because ideally that would pick up much more faster than the tourism from foreign sectors. So based on the players in the tourism industry in Uganda, they estimate that about 500,000 people will be unemployed because of this because they're employed either directly or indirectly in the tourism sector. That's a huge impact on for a country that actually has a lot of youthful people who need employment. And in fact, the Bank of Uganda recently estimated that so the worst case scenario, if COVID had taken, it hasn't yet in Uganda and probably it won't, but if it had taken the worst case scenario, there'll be at least 1 million people falling into poverty. But if it doesn't take the worst case scenario, which it looks like we haven't taken the worst case scenario, then at least 600,000 people will fall into poverty. So in a way that the impact is going to be felt on the ground, and also the growth, economic growth rate for this year has been reduced from the projected 6% to now it's projected to be at 2%. Of course, when you look at it, it's not necessarily as bad. I was listening to the BBC this morning, and they were saying that the UK, the growth rate is going to contract by 14%. So maybe Uganda isn't too badly off in that aspect. But the other sector hardly hit quite a bit is also the agriculture sector. Uganda is a producer of food in East Africa, so we export a lot of food to our neighbors. But because of the lockdowns in all the countries, our farmers are stuck with their goods, with their food, eggs, chicken, maize. They're stuck with it because you can't easily now transport it across borders in and out. So that sector, of course, contributes a lot to people's incomes. And so for Kenya, for example, their biggest export in terms of agricultural type things is horticulture. They mostly export it to Europe, but because of the lockdowns in Europe, there is less demand for their produce. So they are also stuck with their horticulture products. And so is Tanzania. It's also a major exporter of horticulture produce to Europe. And because also there is less air travel, they were trying to use, maybe Kenya Airlines to transport the horticulture products to Europe as before. But then the price of transporting them is very high because they have no return cargo. So they have to factor that entire cost into your one way travel to Europe. So that has been affected quite a lot. For formal trade, that's definitely been hit. There's been a contraction in intra-regional trade of at least 60% because we can't move goods across the borders much more easily. Also, the cargo the ships arriving at Mombasa have been also reduced because there is less stuff coming into East Africa. That has a huge impact on our manufacturing because we need the inputs to be able to produce. But with the shutdowns, I think in China and also India, which are our biggest markets for imports, I think the orders are not being honored as quickly as they would be. But the biggest sector hit that has a massive impact, socioeconomic impact on East Africans, probably Ugandans as well, is the informal sector. The informal sector has been put on a standstill, for Uganda, I think since end of March. It can't happen unless you're selling food. You cannot actually trade in the informal sector. This sector contributed around $500 million worth of economic activity to Uganda last year alone. And it employs, again, about 70% of people involved in this sector are either youth or women. So the fact that it's been put on an absolute standstill since mid-March is having a social economic impact on the people, the children these women used to feed. How are they now surviving? What is going to happen? How soon would we then unlock? And given how infectious the disease is, it's much more difficult to predict that once the lockdowns are done, they're going to lift everything, and then informal trade will start, go back to what it was before. So it will have a long-term impact on the women and the youth who are involved in this sector, and also the men, of course. But they're mostly women and youth who are involved in the sector. Some opportunities, of course, have come up in this crisis. There is always some opportunity sometimes in a crisis. And for Uganda, is the oil sector. You would think that common sense would dictate that the oil sector is going to be affected in Uganda, but because of the plummeting of the global oil prices, and that would have been the case. But the good thing is that we are currently in the development phase. So we are in a phase where we are supposed to be buying oil rigs and drills and contracting people who are going to construct these things. The fact that there is a plummeting in the global oil prices means that these things are cheap because no one is buying them. No one is investing in drills or buying drills and construction material for the refineries. So if in a way this is a good time for Uganda, therefore, to actually invest in the development of its sector. When prices for construction and development are actually low, there is less demand for them. The other opportunity, I think, for East Africa generally and Uganda specifically also is in the rail and water transport. The highest risk target group at the moment after the lockdowns have shown a lot of positive results in limiting infection in Uganda, in Rwanda, also Kenya. The highest risk group for which infections are still very high and very difficult to control has been the truck drivers transporting goods from Mombasa through Kenya, through Uganda to say South Sudan, Mombasa, Kenya, Uganda to DRC, and then also to Rwanda, or Dar es Salaam port through Tanzania to Uganda and then to South Sudan. Those guys who are using the Central Corridor and the Northern Corridor to transport these goods in East Africa have been moving. They are highly susceptible to infections because they can transport the infection across 3 countries in the community. So road transport, which we heavily rely on, and is absolutely overutilized, and has shown to be a high risk area. So the president of Uganda, for example, the other time suggested that we really need to invest a lot in rail and water transport. It requires less players, it's cheaper, but of course there's been a chronic underinvestment in these modes of transport. So in a way it's come up as an opportunity, an investment opportunity now that everyone is looking at how can we limit this.
Okay, thank you, Damaris, for that.
Sorry, I wasn't done. I was interrupted actually. I had some voices, but
okay,
yes.
sorry. Yeah.
So let me quickly wrap up. I guess I'm out of time. So I think also the other sector that has shown a lot of promise is the e-commerce sector. I think of all sectors that have benefited out of this crisis has been the e-commerce sector, where a lot of people are ordering things online. The telecom companies have waived any transaction fees for transactions between people. And in March, we saw a $60 million increase in the value of transactions going up. So given that, of course, we have a lot of e-commerce hubs. Kenya is an e-commerce hub. Rwanda is also an e-commerce hub. So this is a good sector for investment in COVID, because it's shown that that's actually it's contactless. So it limits the infection rate. But I think also the key thing that I think we need to also look at, focus on, is the Africa Continental Free Trade Area. E-commerce, if anything, has shown us that we can't actually rely on global value chains. They are much more susceptible for such global shocks. They're much more susceptible to interference and disruption, and therefore we are in a precarious position. If we import, Africa generally is a net importer of pharmaceuticals. We import them mostly from India. So when we have a lockdown in India, it means the entire continent relying on India to supply it with goods for its own people, for ARVs, for hydroxychloroquine, for everything. It means we are in a much more precarious position compared to if, say, Africa was producing and selling these pharmaceuticals to itself. So I think this has shown that we really need to, if anything, CFTA should have been implemented maybe yesterday, and we need to really quickly make sure that it is. Thank you.
Thank you, Damaris, and for that extended introduction, and also you've touched some of the key things we are going to discuss on question 2 in terms of trade. Of course, you also touched on e-commerce, which some of the questions we've received is about e-commerce and the remote working and gig economy in absence of a stable IT infrastructure and telecommunication and the stable electricity in Africa. In countries like Nigeria is a big issue, but we'll deep dive later on. If I go to the second question, probably get Dr. Bheki and Ezekiel maybe also to elaborate more in terms of the impact of COVID on trade. Of course, there is already, we've seen some of the responses from various global economies, differing responses, some of it which has resulted in trade restriction in certain goods, especially medical. And now we are talking about concern with food security post-COVID. And there's also a lot of debate going on with various economists in terms of impact of COVID. How how it's going to accelerate deglobalization. That's, of course, in addition with trade wars we've seen between the US and the China. Do you think at the moment COVID-19 is likely to accelerate the globalization and also create an opportunity for African economies and government to refocus their strategy to enhance their local value chain and also build the infrastructure for that? I know Damali just touched on it, but if you can elaborate more in terms of what will be the implication on regional economy and also what will be the impact on free trade agreement that we are hoping to accelerate in the near term, in the long term. Dr. Bheki.
Yes, thank you, Eugene. Well, firstly, as you're saying, we are very globalized. Africa has always been dependent on other countries for its trade. If you look at the last financial global crisis in 2008, the main effect was on mineral resources that we traded with other countries. Even during the commodity crisis that happened as a result, you immediately saw the impact in Africa in terms of growth, our reliance on oil and mineral resources. I think what is beginning to show as well is that the mining sector, for instance, in South Africa is beginning to feel the pain, because you'll find a major economy such as China in particular would engage in stockpiling, and that would affect the demand and supply globally and affect Africa in particular. So that's the main area. I think generally, we tend to export still our raw material and import refined products, which is the trend the African Union and major institutions have been trying to work on to turn it around. And I believe during COVID and post-COVID, as Damali has highlighted, we need to look at other opportunities that Africa can tap on. I know the Africa Continental Free Trade Area is one such area that will revolutionize African trade. And going with that is the continuing with building of infrastructure, especially cross-border infrastructure. Our leaders started what we called Africa Infrastructure Champions Initiative, as well as the Program on Infrastructure Development in Africa. The cross-border infrastructure around the broadband and fiber optics has done well in East Africa, led by President Kagame, which I hope East Africa will capitalize on that infrastructure in terms of e-commerce and other innovations around that. And in other areas like your fiber optic network, that is the West Coast and East Coast, that is providing sufficient opportunities for other countries to accelerate and build on the future that COVID-19 brings forth, which is your contactless future, which is becoming a reality every day, as well as digitalization, as well as the artificial intelligence that comes with the fourth revolution. And I'm a believer that for Africa to prosper, we need to tap on our young population, which by the grace of God, if we look at the trends in COVID globally, it will seem that young people have a chance to survive And we can benefit from that demographic dividend in Africa. So we need to mobilize young people in Africa to take their positions and engage in entrepreneurship and be promoted. So some of the initiatives our leadership could engage in is part of the stimulus packages in Africa, is to invest in young people in areas such as ICT, where they can continue with innovations. And I've seen actually online some of the very profound innovations related to COVID itself that are coming from Africa, which I hope our leaders can tap on those and promote them and be agile around those, because those are the areas that can bring new growth opportunities in Africa. And let's invest in high technologies and promote such activities and initiatives. And we have also a lot of capacity in the diaspora that can be brought in at this point in time. I know there are initiatives to bring on board the diaspora, which would assist during COVID as well as post-COVID. Yeah, I think that's for now. There are many other strengths that we can capitalize on in terms of, for instance, the emerging institutions such as AFTA we've mentioned. We can tap on our culture, our indigenous resources. I'm very happy with what the president of Madagascar is doing. I think, and I'm happy the African Union is following up on that product that they're promoting. We can tap on those. And also the fact that we have natural resources, we can still be innovative around them. I hope Ezekiel and the African Development Bank are coming up with very innovative financial packages that can, capitalize on our strength as a continent, natural resources. And we must desist from the heavy reliance on foreign models for our own recovery, because our situation is different. I've observed with the lockdown itself that if we rely on foreign models heavily, we're going to be shooting ourselves on the foot, because those models may not apply fully. Similarly with trade and investment, we need to be very cautious and come up with our own indigenous innovations. Thank you.
Thank you, Dr. Bheki, and also pinpointing some of the key concerns that has been talked about so many times in terms of relying on Western models and the response. Of course, we've seen quite a lot of African government have what we call it copy and paste Western responses and applied locally in terms of lockdown without assessing local infrastructure, taking into consideration African culture and the family fabric, and of course not forgetting the cash-based economy, people who depend on daily earning to survive, and at the moment some of them, they're in between either surviving or die for hunger or die for COVID. So it's a huge concern on that area. If I go to Ezekiel before maybe bringing the next question, Ezekiel, if you can probably elaborate more in terms of the investment landscape. We've seen quite a lot of investment outflow from Africa, and of course the investment has fallen as a result of COVID, as investors' confidence declined. How do you see the situation likely to evolve in the long term? Are we likely to see more local investment, because quite a lot of African economies are cash based and they have a lot of local liquidity that we can tap into, which we never see? And also, so in absence of foreign investment and of course diaspora investment also is likely to decline, are we going to see a shift in terms of investment? And also, how is the FDB likely to refocus its investment to support infrastructure development, to speed up certain sectors of economy like ICT, to promote digital economy? Hi, Ezekiel.
Yeah, thank you very much for that, and thanks for Dr. Bheki for that intervention, because I think it's important. I think you ask a very useful question. I think if there's a time where we can reset and rethink how we are journeying this journey of the human race, I think there can never be a unique opportunity than now to rethink. And I think you asked a very useful question about globalization. And I would like to actually suggest, put on the table that perhaps we should be looking at what we call localization, meaning that you produce and beef up your internal capacity to at least feed your people and trade and manufacture, and then also play in the global value chain. So there's no way we cannot trade with the rest of the world. But the fact here is economic resilience. How do we build resilience in our economies, and whether it's an investment or private sector? And I think this touches on even the stimulus packages that you're mentioning. And like you can see that most of these stimulus packages actually borrowed money, and they are not coming as a result of buffers that has been saved. I mean, I mean, we have, and for those who are very useful economics in the room, you have a country printing all the amounts that they can print, and others cannot print because we don't have the productive capacity to actually trade amongst ourselves without relying on the reserve, global reserve currency. So I think if there's any time we need to retrace our steps, it is now. And I will speak specifically on the investment question. I mean, the African Development Bank has been very robust and in its response to COVID. I mean, we have approved, released the resources for about 10 billion to fight COVID. But also we raised at the London Stock Exchange a 3 billion social bond, which was oversubscribed. I mean, so when you talk about investment, I mean, the sentiments are there. I mean, the investors actually have a positive sentiments about the economy in the continent. And the question is, how do we channel these sentiments in a structured way to address the critical infrastructure and gaps in the continents? And I will speak as well for the African Investment Forum. I can tell you that, I mean, what our experience has been that there's been a bullish sentiment of investors looking for, I think investors, I mean, the way they behave, and I'm happy I have Damali on the call as well, I mean, on the panel. I mean, investors look for price, I mean, when there's chaos everywhere, I mean, that's the best time to pick up assets because you're picking them at almost rock bottom market prices. So, I mean, and if there's any economies will always go in cycles. But the critical point here is, are we building the resilience required to cope with the next pandemic? Because beyond just COVID, there will be other pandemics that will come. But do we have the necessary structures, economic structures? Do we have the necessary ways to beef up the productive capacities of our economies to make sure that even when the next one comes, that we are not where we are again? I mean, I remember in the financial crisis, we're all caught unawares, the same way we're caught unawares with this pandemic. Now, are we going to be on that trend to always be caught unawares when there is a global pandemic with countries that are able to release huge stimulus packages doing that, and countries that are struggling with fiscal space, like most African countries, not being able to do that or do that with borrowed money? I think we need to reset our economic paradigms and how we revisit trade, how we revisit investment. I mean, for the African Investment from just 2019 alone, I mean, we actually do the forum, which is a totally transactional forum. I mean, dealing on transactions, I mean, right to the boardrooms, the way we structured the forum. Last year, we took deals worth about 67.6 billion across the whole continent, and we got investment interest across those assets of about 40.1 billion. And I can tell you that as despite COVID, most of those assets have been followed through by investors today to close them. And if you look at the critical sectors, as you mentioned, energy is a critical sector for investment. So regardless of the cycle, the infrastructure has always proven to be an asset class that is acyclical to economic downturns. So it doesn't matter whether there's rain or sunshine, you need energy. You need energy to power your industries, you need energy. And what COVID has also shown that, infrastructure in ICT is also a critical element. You need that. And then I think we'll move more to contactless situations, even in education, in telemedicine, and all these different areas. You need proper health infrastructures to be in place. You need a whole system to actually address pandemics when they come. And you need also an economic structure to address the impacts, of economic shocks when they come. So I think countries need to set up structures that can help develop buffers so that you're not left, as naked when the next wave comes, but you can cushion some of that with the buffers that has been created. And I think this is absolutely important, and that we don't continue to find ourselves in a situation where we are recovering, we're talking about resilience and recovering, but that we build the sustainable, the long-term resilience that is required for long-term growth and sustainability. This is the right time that we need to look more inwards. At the African Development Bank, as an infrastructure focused bank, we invest a lot in infrastructure. We did a lot of health projects. At the African Investment Forum last year, 500 deals. Deals worth about 500 million was traded on the platform, including a pharmaceutical project. I'm talking about health project now, including a pharmaceutical project in Tanzania. And now we're looking at potentially investing in Kenya. And when you go down to West Africa, we looked at investment in modern care, looking particularly on the IVF, and looking at infrastructure and health in Ghana, for example, and also pharmaceutical in Cote d'Ivoire. So we started off this process proactively, but I think we need to do more, and that's why this situation calls for reflection. Question is, how do we? We're not going to get back to where we were before. How do we journey forward? And in what best way do we journey forward? We need to now craft our own model and not rely on the blueprints coming elsewhere, because those are models around the realities of those economies. They're not necessarily adapted to our own realities. And I think we need to trade more. And I'm very excited that this opportunity, actually, this pandemic creates a unique opportunity for the Continental Free Trade Agreement to really take off. We are looking at that at the African Investment Forum as well as the bank, but we also encouraging countries to begin to trade amongst each other. And I speak also particularly for South Africa, because there's a lot that South Africa can do with the rest of the continent. And I think this is a good time to begin to, and I praise the work that President Ramaphosa has been doing to deepen the relationship between the trade and investment relationship between South Africa and the rest of the continent. This is the unique opportunity to take advantage of opportunities that abound across the continent. And I say COVID, why the rest of the continent would deal with recovering to whatever normal that would be. For Africa, the investments are huge. We have to invest more in our infrastructure. We have to invest more in building cross-border infrastructure, financial systems. We have to do more. So the opportunities are there for the investors, and I think investors realize that. And what we're doing at the African Investment Forum is to maintain that investor sentiment and create this asset class that allow for this capital to be deployed in a way that the transaction structures themselves are well de-risked, and also it benefits, it delivers value for money both for the countries but also for the investors. And for the continent itself, we have the resources. I think about 1.8 trillion of non-traditional institutional investor capital rests in the continent. Now, where is the bulk of that money going to? They're going to negative instruments across the world, money markets, and whereas they should be deployed into infrastructure projects in the continent. And I think that's one of the areas that we have been working seriously to introduce pension funds, sovereign funds, or the asset managers, both in the continent and outside the continent, to begin to look at our infrastructures and as a unique asset class. And like I said before, infrastructure is one asset class where it is not tuned to the kind of volatility you have in many other asset classes. In the capital market, it's cyclical. It does not follow the economic cycles. It is resilient to shocks. I mean, as we mentioned about energy, investment in energy will continue. Everybody needs power. And I think it's the right time to begin to refocus our energies on building our productive and manufacturing capability to be able to trade more, streamline trade regimes, and facilitate trade across our borders. And I recognize very clearly the comments from Damali, because I was actually involved in currently with some of the projects in Uganda where we're talking about the Kampala-Jinja Highway, which is an important trade, northern trade. I am on the call, please. Okay. Sorry about that. It just got some disruption. It's a part of that. I think it is critical that these trade corridors are deepened, that we expand them and we pursue them. And I really would call for a rethink of the way we move forward. Thank you.
Thank you, Ezekiel. Of course, you've highlighted quite a lot of critical things to look into. Especially, you mentioned strengthening local investment, looking at how we can accelerate African free trade using COVID as an opportunity, and also looking at building inward trade. But if I take this question, I've been going through some of the questions we've received so far. One of the questions which is has been also being debated at the moment is post-COVID-19 food security issues. And I know Africa spends around 30 billion a year importing food. And while we have almost 30% of arable land in the world, and we are also talking about food security, where we see a lot of Western countries now a bit concerned in terms of the disrupted supply chain, not forgetting East Africa raw caste issues, which has been put on the side at the moment, because we can see the raw caste now are already going all the way from in the Middle East and on the way to Pakistan. And at the moment, people are only focusing on the COVID issue. How can we strengthen food security and build resilient local industries? I know your president, Dr. Adesina, is very passionate about agribusiness, and he's been championing to create the next billionaires in the food industry in Africa. So one of the questions that has been raised is strengthening food security in Africa. How can we strengthen the food industry, the food supply chain, and improve productivity for future long-term stability? I don't know if anybody who wants to tackle that. In general, who want to answer that one, or I can?
I can mention. I mean, I can come in there maybe. I think for agriculture, I mean, as you know, the locust situation has been termed more now locust 19. I mean, because and that's the pandemic that we have pandemic amongst other pandemics. So it's not just COVID that the continent is dealing with. I mean, and all of this is creates a unique situation where it puts a lot of pressure on fiscal space. But I think for Africa, the goal will really be agro-industrialization. I think beyond just the immediate intervention and trying to address food production and also preventive measures, because as you said, I mean, 35 billion, I mean, being spent on food. That has actually risen. It's likely to go up to about 110 billion. This 35 billion was in 2014. It is currently about 47.59 in 2019 and could go up to 110 billion imports of food in the continent, and a continent that has 60% of the arable land globally, that can actually be a zone to feed the rest of the world. So we really have to look at agriculture as a business. I mean, this is something that my president has been preaching, that we need to look beyond the smallholder farmer structures to begin to take agriculture more as a business. The only thing that has actually survived in this COVID pandemic as well is food production. Everybody must eat. I mean, I see that people can source for that food, whether they cook, they go and get it themselves or through the internet. So if there's any industry that has a unique value proposition now that you must do every time, any day, is agriculture. And I think we need to take agriculture seriously, but move up the value chain of agriculture. I think the commodities level that African plays in is too volatile. It does not deliver value, and we give up value. And I'll give you an example of that. Cocoa, for example, over 70% of the global cocoa in the world comes from two countries, Cote d'Ivoire and Ghana. And yet we export more of the cocoa beans, and we import the chocolates to celebrate or to give to our friends. So and the key value, the main value in those products, of course, we're not adding value to our agricultural primary goods. We see that a lot of that value is lost. And I think Africa agricultural sector needs to move up the value chain. I think South Africa has done well in that space. There's a lot of more to do. But if you look at other countries, even Kenya and I think Uganda, and that's why I was referring to the Kampala-Jinja highway, because it's a logistic hub that actually promotes the manufacturing of food produce. But beyond that, I think we need to do more on the value chain, on going towards the processing side, agribusiness. And then I think in linking that to the continental free trade, that's the only way we can trade value amongst ourselves. Because if you produce cassava and I produce cassava, there's no way we can trade, we can create value. And I think also we've come to a point where we don't necessarily need to produce everything in one country. And I think the era of global and regional value chains, regional value chains in terms of production is now something that we need to relook, because actually that helps, brings and forces regional integration and regional market integration amongst countries. So I'll give you an example. The Apple phone that you use is produced in several countries. The Boeing airline, if you look at the production line, the production is done by many countries, I mean, all together. So it is not France building everything from scratch. It's the chain of how this supply chain moves is across different countries. So I think we need to learn from that, because we don't necessarily have to produce everything in A to Z in one country. We can produce, do a primary production in a country A, and a primary production country A, primary processing in country B, and secondary processing in country B, and countries can learn. And so when you have a product, you cannot say made in Kenya, for example. It's almost like an East African product. And because that supply chain is across several countries, it forces and even breaks down those trade barriers that we have amongst ourselves. And I think we need to look at agriculture from that space and look at zones, whether it is trade corridors, and build agricultural zones along those trade corridors where we can take one product and it is spread across several countries, and we can create markets amongst those countries.
Thank you, Ezekiel. If I extend to the issue you just raised in terms of building a value chain, of course, we'll need a strong supply chain, and these are the key ingredients to industrialization in Africa. But based on even my experience when working various clients, trying to set up a lot of manufacturing company in South Africa and Tanzania and Ghana, one of the key issues we've struggled is reliable supply chain, which is one of the biggest issues in Africa. And this will be critical to build and establish a robust industrialization strategy. I don't know if Damali and then Dr. Bheki can talk about how can we, which also adds to one of the questions that has been raised, how can we strengthen the supply chain in Africa to build up local industries, especially production. Ezekiel just mentioned some of the, we can be able to build some of this local product locally, as long as we have regional supply chain strengthened, depending on international suppliers. How can we strengthen local supply chain? Also, it can also help to build the local integration as part of the African free trade.
Okay, thank you, Eugene. I think I'd like to start off with the food supply. If you look at on the continent, it's only 15 countries out of 54 countries that are food secure. Uganda is actually one of them. We are a net exporter of food, but the rest of the countries import food, and mostly they don't import them the food from African countries. They're importing it from without Africa. So I feel that if we implement the Continental Free Trade Area, where we remove tariffs against each other, that will help for us to actually be, as a continent generally, to be much more food secure. But to do so, of course, we need to remove tariffs against each other, which is a recommendation of the Continental Free Trade Area. 90% of the tariffs should be removed. But then also, we need to also look at logistics. How right now it's difficult even for Uganda to move goods, food, fresh produce from, say, Kampala all the way to Kinshasa because of the poor infrastructure along that entire route. So logistics and infrastructure are a key thing. And then also energy, because if energy is expensive, the cost of production is expensive, people just will not produce. But the other key ingredient to that, I think, is the value addition. Currently, during this COVID lockdown, it so happened that because we mostly export fresh produce to our neighbors as a country, Uganda does that. When the lockdown happened, we could not actually export our fresh produce. So our maize, our eggs, our poultry is lying with us. It's with the farmers, and they can't do anything about it. It's just getting spoiled. And as a result of this, a lot of government incentives have now realized that, okay, we need to support our local manufacturers, our local producers. So the government of Uganda has come out now with incentives, which it hadn't come up with before. It's only come up with incentives now to catalyze the local manufacturing so that we can add value to the things that we really can export. So we had a pharmaceutical industry that was mostly focused on producing ARVs. When COVID came up, the government now gave them incentives to produce the hydroxychloroquine, but it's because we can't easily import it anymore from India. So the crisis happened. We can't import easily hydroxychloroquine into Uganda. We need it. So the pharmaceutical industry has now been incentivized by the government to specifically produce that thing that we need, which then we can actually export to our neighbors. The other sector that government has now incentivized is the breweries. They've incentivized them to use the ethanol instead of producing alcohol to produce sanitizer. And it's because we were running short of sanitizer as a country. So they foresaw that as a major problem going to the future. So they started looking, how can we incentivize the local manufacturers to manufacture this thing? The other one is actually the clothing industry, which was producing jeans and t-shirts for export to Europe. But because of the crisis, we needed the PPEs, we needed the masks, the gloves, and we weren't getting them. Now government has incentivized those sectors to produce for local consumption, but then also regional consumption. And I feel that, unfortunately, it took COVID to get us to this place where we are incentivizing local manufacturers, not trying to attract only FDIs where we give them incentives to the foreign investors, but the local manufacturers that are currently here who are producing domestically. How can we incentivize them so that they can produce the goods that we consume as a country, but then also as a region and also as a continent? So I think we need to add a lot more value. In fact, one of the things that the government is now looking at seriously is to add value to that fresh produce that we were actually exporting. The eggs, for example, we want to add value to it so that we turn it into powder, the milk also turn into milk powder. But those are things that we need to do not only to catalyze the continental free trade area, but also for jobs, for job creation, because the more manufacturing you do, the more people that you're going to employ. But to do so, even to catalyze the continental free trade, we have to remove tariffs. We have to improve infrastructure. We need to invest particularly not only in road transport, but in rail and water transport for those countries anyway that have, now East Africa, we have Lake Victoria, which we can easily use. So water transport is very key. But rail transport, how do we ensure that there is a rail channel from Mombasa straight to Kinshasa and even Central African Republic to Juba? How do we ensure that we can actually do that? I want to also touch the issue of the stimulus packages. I think Uganda, Kenya, and Rwanda right now have just secured loans from the IMF, and ideally they're going to be helping, the COVID economy, how to help the COVID economy. But we are in this situation because for example, Uganda doesn't have those substantial reserves that we would have relied on at this time to actually catalyze, to stimulate our economy. Then we would not have been borrowing. A country like Thailand, I think last week, actually just dipped into their reserves to catalyze their economy. I wish we as a country were in that place where we can just use our reserves, but we've had a negative balance of payments for such a long time that we don't have sufficient reserves to be able to dip into and catalyze our economies. But if we do these things where we invest in local manufacturing, we ensure that there is a continental free trade area so we can import and export from each other, that will help our balance of payment and therefore enable us to have more reserves, but then also have the resilient economies that I think Ezekiel was talking about. How do we ensure that we're resilient for the next crisis? I was watching, I think, what was I watching? I think Bloomberg, where they say that actually if COVID is like the Spanish flu, it will have 3 cycles. So we are in cycle 1. So there's a first wave, which is currently, but there'll be a second wave, which is also equally as big as the first wave, and then the third wave, which is smaller. So if COVID is Spanish flu-like and it has 3 waves, what is going to happen if our economies are not resilient? So we need to take this as a lesson to make sure that we prepare ourselves for the next crisis. But even beyond that, we need to get sustainable economies. And the only way to do so is to really just add value to our products and then trade more with each other and then deal with the major issues that affect economic growth, which is poor logistics, poor infrastructure, lack of energy, and then low value addition, and even the barriers, the tariffs amongst ourselves. We have to remove them. Of course, the continental free trade area was supposed to be launched, I think, 1st of July. I read just recently that it's been postponed to December. I'm not so sure of the reasons for that, but I feel we need to really grab the continental free trade area by the horns and get it operational and implemented. Thank you.
Thank you, Damali, for that extended brief in terms of how we can strengthen our supply chain. So if I go to Dr. Bheki, what's your thought in terms of the question in strengthening the supply chain to accelerate industrialization in Africa, taking the advantage of the COVID-19 disruption and also some of the other factors around the current situation to build and strengthen the local industry for local resilience?
Well, thank you, Eugene. I think Ezekiel and Damali have touched on critical points when it comes to boosting local value chains, especially around agriculture and agro-processing. I think especially what Damali is saying about the African free trade, continental free trade area, that was supposed to start in July. Whether it starts in December, but we have signed up, and the spirit of the agreement should, start now. We should be looking at such platforms, Eugene, that you have created to look at innovative ways of starting, actually. For instance, we can work on knowledge sharing, and how we implement technology transfers and build the capacity for commercial farming, as well as smallholder farming. including agro-processing, Ezekiel mentioned. That's very important. I've noticed, for instance, South Africa has a very well-established commercial agriculture community, which has, some of it has been moving into Africa, of course, with intervention from leaders, you know, to say, well, you can come and we have land, you can do some farming here. And we've also had a huge move in terms of the retail companies investing in different parts of the continent, which I think when you go around, you'll notice food chains like ShopRite and Massmart, which is Walmart now. You find them in different parts of the continent. But if you look at the linkages, they're still very weak, precisely because of the standards that are required by these food value chains in terms of the quality, as well as the efficiencies and you know, the whole supply value chain, as you mentioned, Eugene. The requirements. So that's where the gaps for capacity building and technology transfers are. I think as young people, I consider myself young, we stand a chance in Africa to build those knowledge sharing platforms using technologies and physical contact post-COVID. We can create those platforms under the banner of the African Continental Free Trade Agreement. Yeah, so that I wanted to pay attention to that, because you're absolutely correct. The agriculture, actually every other continent is looking at Africa, salivating because of the fertile land that we have throughout the continent. And whilst we've failed dismally to guard our minerals underground, we need to still guard our land and make sure that ourselves, we lead in investing in our land and in agriculture and agro-processing, because there's huge demand in different parts of the world for agricultural products. I can give you an example. When Russia went through sanctions recently, I think it's 2014, they needed a lot of organic food products from us, South Africa and Africa. But we were found wanting because we do not have the capacity in terms of logistics to export, and the cost is huge, which does not make business sense for an investor who is in Russia to buy from Nairobi or Durban. It doesn't make business sense. So we need to build those efficiencies. Air freight, it's a huge opportunity to invest in air freight. I see in terms of commercial passenger airlines, we're quite good because a lot of foreign airlines are in Africa. But in terms of air freight, it's still monopolized by a few big monopolies in Africa. So those are opportunities. Similarly with shipping, the very few, actually, probably there's no African country that has a strong shipping line, which affords us to export and foreign exchange from our own indigenous agriculture, as well as other productive activities. So the African Continental Free Trade Agreement it's a launching pad, but we need to start now. And I'm emphasizing that because we have been honored as South Africa to be the first General Secretary of the Secretariat. So we need to work with all our African brothers and sisters and institutions to build this momentum and build the knowledge sharing platform and capacity. Yeah, thank you.
Thank you, Bheki. If I stay with you for a few, if I stay with you for a
quiet, Daddy.
Okay, yeah, that is on the call. Wait. If I stay with you for a few minutes, and there's one thing you raised about promoting local creativity and innovation in Africa. But Africa, we suffer from patronizing our own innovation. We see that especially now, quite a lot of creativity is coming out of Africa. So many good ideas, but of course need the investment to refine, tune it,
Daddy, be quiet.
To improve quality and also enhance productivity. But how can we transform mindset for African to have trust in African product and also patronize African solution? We still in that colonial mindset where we believe a product made in Germany or in the West is better than something made locally. Instead of taking, especially with the new COVID medicine from Madagascar that has raised a lot of questions. Some people, instead of saying, okay, let's assess it and see it might be a good solution, they are quick to undermine it and quick to jump to say at the moment there's no rush to conclude. Instead of taking the opportunity to explore, how can we patronize African solution innovation and invest into African product and also build our confidence in a way that in the long term we can actually be exporting internationally?
Yeah, I think for me it's a psychological warfare. You know, global trade, it's about positive psychology and you know, belief in your country, in your continent. You know, that's why I have made in you know, campaigns, invest in campaigns globally. You are absolutely correct. As Africa, we've been shy to I think we have a psychological issue. We need to work on it. We've not had confidence to understand our strength as Africans, where we come from. So for instance, the issue of Pan-Africanism, of course, probably has not penetrated our thinking in terms of commerce, because that's the base from which you build understanding the value of your culture, the value of your history, and what uniqueness that you bring into the world. I think with young people in Africa, there's an opportunity to change the trajectory and capitalize. Everybody is coming to Africa to benefit. I've met lots of investors, whether it's film and entertainment, whether it's energy, they're all here. I'm sure Ezekiel will tell you, they know that this is the last virgin territory that has massive opportunities. But of course, they need to rely on us. We need to build our capacity financially, as well as technologically, our institutions, our universities, working with them to create centers of excellence, science parks, and create incentives for the diaspora to come back and assist in the continent. You know, in China, during the late 80s, I mean, the whole 80s, early 90s, they invested in training their students in top universities outside, but they maintained the consciousness that they must come back after they've studied in Oxford or Cambridge or Harvard, come back. And they created budgets for those students to come back and innovate. They developed huge science parks and facilities for these students to come and create companies and innovate, commercialize in China and in other East Asian countries that have leapfrogged and are now on the cutting edge of innovations technologically. We need the same attitude to leapfrog, and we can. I've traveled around Africa. I know the capacity that we have, if we are in the right mindset that we must continue to build. Thank you.
If I take another question here, probably it's all about will the current disruption with regard to COVID-19, is it an opportunity for Africa to benefit from diversification of the supply chain? We're seeing a lot of Western countries now start planning alternative supply chain within, away from only depending on China. Is this an opportunity? Are we likely to see more Western countries coming to establish local supply chain within Africa? I don't know if anybody can take on that. And also the other question that we've received is about e-commerce and the remote working. It's about how can we set an e-commerce business or remote working without reliable infrastructure or ICT, especially in the current crisis. And we've seen also the case of the Jumia, which has lost its share price from $48 to only I think $4 per share in the last 1 year because of various ICT issue. I don't know who want to answer that one first.
Yeah, let me touch on that because I think it's a very interesting case. Interestingly, I sit in the board of entrepreneurs, the center at MIT in Cambridge, and just actually last weekend we had there was a global hackathon, and that was done looking for innovative solutions or ventures that are looking to work in Africa. And it just tells you that, I mean, and amongst the participants, you have people who have no clue where Africa is on the map, talking about coming to take advantage of opportunities because they see the opportunity anyway. And I think that's what I was just trying to anchor on what Bheki was saying about the need to encourage the diaspora and also the talents within the continent. There's quite a huge talent within the continent, and to begin to, and for government policies to create the enabling conditions for you to allow for this innovation to become commercialized. But to speak directly to your question on Jumia, and I think I wanted to touch on that before coming to Jumia. Now, if you look at the original owners, I mean, the owners of Jumia at the moment, these are not, they're not African, there's no African equity or ownership in Jumia. I mean, it left from being in Nigeria with trying to, where it started, and I think it was then the founders were coming from Nigeria, I mean, from the continent, and then they sold out to foreign players. But you can see that there's dispassionate, I mean, operation in terms of the way Jumia operates. I mean, it's really about the share price and getting the value and moving on. So I haven't seen so much. I mean, if you are in the continent and you're an entrepreneur in the continent, there is a level of, and I think it draws back to what Bheki mentioned. There's what we call a coordinating device, a national, that national pride or continental African pride, that you want to do something to make it work. But when most of the unicorn, what's it called, entrepreneurial ventures we have are bought off very early by foreign capital, then that disappears. And I think it's because we have not deepened the culture of investments within the, I mean, especially in venture capital and the entrepreneurial space. For entrepreneurs to know that, I mean, building a company is not something you do today and you jump out tomorrow, but you can create value. And obviously, yes, there should be exit scenarios in every business, but that is not coming where you are actually selling off at a point where it's almost nothing. And I think practically because of that is that there's that market has been quite illiquid. So it has changed recently because you have now funds that are ready to invest in African ventures. I mean, entrepreneurial ventures are willing to invest. But before now, entrepreneurs really struggle, and I think they also struggle now. So if you're trying to put the next food on the table, and you have somebody dangling $100,000 or $200,000 in front of you, you take it and move on. But you've really sold off the real value of that business because there's no gas in the tank to take it further away and be able to actually create sustainable businesses that you can actually catch in. So for me, I think the innovation is there. Jumia's story is not to say that unique e-commerce is not a viable venture. In fact, even now we would need more, particularly because I think COVID has brought the realization that we have to now people feel comfortable now to buy things from the internet, to ask for food for the internet. So I think COVID in a way is helping to build that user awareness and education, because ordinarily you think, oh, I can just drive by and get my food. Why do I need to buy on the internet? But now you see that it's more convenient. I mean, there's more, and I think from that, it can actually have a ripple effect, a positive ripple effect on online businesses, which I think Africa really, really needs. I mean, and also given the kind of, when you go to urban areas, the congestion you have in urban areas, you find if you're in a city like Lagos, for example, before you move from point A to point B, the day is gone. So if you can get most of what you want online, I'm sure you want to do that, because it's just not feasible for you to go around as you normally do. So I guess there's a new wave that is blowing for African entrepreneurs, and I think they need to seize that wave, and it will be for them to have the culture to build companies before they cash out. And I think on the question on the value chain business, I think it's really clear that we have to build local and regional value chains. So I'll stop there.
Thank you, Ezekiel, and that's a good point you raised, of course. And if people can take advantage of mobile penetration, especially how the mobile internet and banking has penetrated in Africa, it can create an opportunity for e-commerce, especially through mobile and other facilities that are already established. And unfortunately, we've gone past our time, and some of our speakers were unable to join because of the other competing priorities and emergency. However, I just wanted to ask, it's been a very thought-provoking and insightful discussion. Before I wrap up, I just wanted to ask you for just to conclude. For someone looking for opportunities in Africa, while as the economy recovers, we go past COVID crisis, where should they look for? What are the best practices of investing or operating in Africa? What would be the best guidance you can provide for the people listening to us? Of course, like the way you mentioned, everyone within the global market are looking Africa for many opportunities, and of course, COVID will accelerate this appetite, including more investment and establishment of new supply chain within the African community. Which sector should they look for? What opportunities are likely to come out? What will be the best practice and guidance they can take on board from you? I don't know who wants to start. Maybe Dr. Bheki, do you want to start, or Damali?
Yep, thank you. Thank you very much for this opportunity that you have created. Well, there's a wide range of opportunities, in Africa. I think what is important is to look closely at the policy and regulations in each country, because that gives you a signal that those countries are serious about, creating an environment that is suitable for investment. We're seeing good examples in countries in East Africa and in many other parts of the continent where there's strong, creation of an enabling regulatory environment. and also governments are putting forth, infrastructure that is required. So that immediately opens up lots of opportunities. Well, trade being a priority now, you can trade in virtually any type of product. Like we're trading on COVID now, PPEs, face mask. It's amazing how it has generated the buzz within the entrepreneurship community. So we should continue to look at that. I think with COVID, there's also an opportunity for localization and local production, which is like an imposed import substitution or import substitution, because we're going to have imports keep picking up very late in recovery because of the travel restrictions, as well as restrictions on some export in different countries. So there's strong move towards local productions. So would encourage people to look at different product ranges and look at how they can quickly create local production. In South Africa, we have even laws that promote local production, as well as inclusion of previously disadvantaged populations, which are very important and enable us for participation in global value chains of small businesses, women, and young people. So those are opportunities that are there. And I must encourage even foreign investors to really work with locals in different countries and respect the laws that encourage technology transfer and knowledge transfer, because that's how Africa can grow. We saw how the whole miracle in Asia started in Japan with strict laws on transfers, technology transfers, knowledge sharing. That's so companies like Toshiba, benefiting from IBMs to become global companies. So similarly with Africa, we can easily learn by knowledge sharing and working with other foreign investors. Thank you so much, colleague. I hope we will take on with this discussion practically in terms of projects that will take our thinking forward. Thank you.
Thank you, Dr. Bheki, for that conclusion and highlighting key things for consideration. If I go to Damali and then Ezekiel, Damali, what's your conclusion in terms of anybody who's looking for opportunity as they go post-COVID and the economy recover, where to look for, what will be the best practice and guidance would you provide?
Oh, thank you. Thank you, Eugene. I think the first area that COVID has shown has been the supply chain, the African supply chains, and the weaknesses, the fact that we are very fragmented. So I think an area of key investment will be in the local, regional, continental supply chains for key products. I think that's a good way, because everyone has now become conscious of the fact that actually we need to start producing the stuff that we consume on the continent. So I think that's a good area as an investment. And the other area I think is e-commerce. I usually disagree with people who always bring up Jumia as the African e-commerce thing that we should look at, and because it's failed or is going to fail, therefore e-commerce in Africa is failing. I think that's misguided, because as Ezekiel actually elaborated, Jumia is not necessarily an African e-commerce. If you look at our level of uptake of mobile money on the continent, is the highest actually. We have the most transactions on mobile money in the world. So we've leapfrogged so many technologies to get straight to mobile money and move away even from traditional banking. So we are using drone technology. I think I saw Rwanda using drone technology to disseminate information about COVID. Again, leapfrogging so many technologies to get there. So e-commerce is a major area of investment, and COVID has even amplified it even more. In fact, one of the winning sectors, at least for us in Uganda, in COVID has been e-commerce, because now I can literally buy tomatoes from my local market in my area just using my mobile phone. I can order because they have an app. They've created apps for these markets, and it's only happening just between January and now. apps have come up for our local markets, which we didn't have before. Now I can order for tomatoes to be delivered to me, and then they use another, they're in partnership with another e-commerce platform, which has the motorcycle riders who then deliver it to me. Then I pay them using mobile money. So I feel e-commerce is an area of investment that has an immense amount of opportunities on the continent. Regarding, I think, the issues about we Africans not necessarily appreciating certain products that are produced by we Africans. I think we need to develop that consciousness where we patronize our own stuff. And I feel we've done that a little bit, especially in the music industry. We are consuming more of the African music than we are consuming of Western music, at least the young generation is. Then also in clothing, we are beginning to patronize more of our clothing. So we need to build that consciousness where we buy local and consume local, and then also make sure that we can at least make sure that we can buy the stuff that is specifically African. But of course, to do so, we need to also improve the standards. The only reason why Africans are consuming African music is because it's good quality. So we need to ensure that it is of that quality and of that standards. To do so, of course, we need certain incentives. The governments have to definitely incentivize the local manufacturing and production. They need to give tax incentives to them, the same incentives that they may even more, maybe, more incentives to local manufacturing, domestic manufacturing than they do give maybe to foreign. So that they can catalyze that, because when we produce the stuff we consume, it makes us much more resilient. So I think also maybe the last sectors that I would talk about are the traditional sectors, i.e. Infrastructure. We need to be able to move our stuff from Mombasa to Kinshasa easily through rail, through road, we're already doing that, but through rail. And so that connection on the continent is very, very important, and I feel it's an area that we could invest in a lot more. But also then logistics services. How are you able to consolidate stuff? Bheki was talking about how Russia was to buy stuff from the continent, but how do you consolidate it? How do you organize it in a way that it can be in bulk? So a buyer can buy it in bulk, even if it's from 3 different countries, across 3 value chains, or across 3 people who are 3 different countries that are contributing to the same value chain. How does a supplier just say, I want X amount of coffee from the continent, and somehow Uganda, Ethiopia, and in South Africa just are able to consolidate to be able to fulfill this one order in a way. So we need to look about logistics services and, of course, employ technology to be able to catalyze that. Thank you.
Yeah, thank you, Damali. Clearly, Africa is awash of so many opportunities that we need to look for moving forward. Ezekiel, what's your final thoughts and guidance in terms of looking towards post-COVID and the many opportunities within the pipeline? I think you're on mute.
Sorry, I think I'm on mute. Yeah, thank you very much. This is just music to my ears, because actually there are many opportunities that abound in the continent. I mean, and we have those opportunities for investors that are willing to engage. We also are able to guide in the process. I mean, from the African Investment Forum. And it's not just, I think it's gone past the days when we expect project to be fully ready. I think these days we co-develop the project with the investor, whether they're foreign or whether they're local. I think we want to encourage more local and joint ventures between local and foreign investors. But I think gone are the days where you bring your blueprint or you want to impose. I think co-development is a way to go. So we provide that advisory service in helping investors, I mean, both project sponsors and investors link up together and get the transactions accelerated to financial close. And then, but over and beyond that, as mentioned, I think there's huge infrastructure, I mean, opportunities in infrastructure, whether it's your port rail, whether it is energy, power, whether it is also in agriculture, agribusiness across different value chains. And as mentioned by Damali, the logistics platform, which is critical in terms of the consolidation of products from different angles, building those trade corridors. And they're unique, I mean, they abound. And I think the platform recently has over just within 12 months has closed over $2.2 billion of deals, financially closed. So meaning that all the financings were raised. And so we want to do more. And then this is a platform that does not exist anywhere in the world. I mean, we started off from an innovative point, and now many are coming over to learn from what we've done. But it is also like Damali has said, and also Bheki has said, is they believe in ourselves. I mean, they believe in that the continent can do, and the professionals in the continent are professionals anywhere in the world. I mean, it used to be before that you don't have a global workforce within the continent, but these days people finish and they want to really go back. And so you have all the global expertise that you will need in the continent, and even more so, even better educated than the ones coming from elsewhere. So I think we need to believe in the human capital that we have. We need to develop more human capital. We need to also believe in our consciousness, in the fact that we can do and change the narrative. The African Investment Forum is about changing the narrative. And I think within 2 years, we have actually changed the narrative of how you can do business in Africa. And we want to do more. So we welcome every investor, any project sponsor who is thinking about a project. We can support you, and then we can work with you right from the preparation stage of that project, helping you to look for financing, helping you to structure the transaction, helping to crowd in capital, and helping you to accelerate that project to financial close. That's basically what we do. And I think that value, and we want to spread it across both big and small economies, but also diversified across different sectors. So health becomes also an important area as well. And I think the reason for health is that people really forget. If you look at the health tourism figures, they're staggering. But I mean, if you build your pension fund, your pension money, you work all your life, and you want to enjoy yourself, that's where you need your health infrastructure. So why spend all those money? I mean, and you get to where you need to enjoy after spending all your energy, and there's no health infrastructure to actually take care of you, and you have to spend that money outside again, out of the continent. So I think COVID really provides a unique opportunity for us to rethink. I guess humanity has been walking aloof in the wilderness, and COVID was more or less a thinker to bring us back to realism. And I think we're glad that beyond the challenges, there are unique and many opportunities. And we're happy from the African Investment Forum to support anyone looking for those opportunities.
Thank you so much, Ezekiel, for the brief closing remark. Unfortunately, we've gone beyond our timing, but the discussion has been thought-provoking and very insightful. Quite a lot of things to learn, and of course, quite a lot of opportunities discussed and pinpointed to look for as we move forward post-COVID-19. Thank you so much for our speaker for joining us and sharing perspective and the insights, and everyone who was able to join. This discussion has been recorded and will be available on viewing on demand. So I'll be sharing more in detail. And we hope you will be able to join. We have more feature webcasts. We are hosting this discussion on a weekly basis, looking at various topical issues. And we hope you will be able to join us in the future or to support future discussion. Thank you so much. It's been amazing having you, everyone, and great to learn from you. And have a good day and long weekend. Thank you.
Thank you.
Thank you very much.
Bye-bye.
Bye.
Thank you. Bye-bye.